Now, you probably know about Ethereum's merge going through today. Richard Hart has given some of his thoughts on this in the article here in the Insider. We'll come back to this in a second. I just want to go through the FT article with a bit more detail. Ethereum merge concludes in a key moment for crypto market. Second biggest blockchain upgrades to more energy efficient processing system. The merge, which has been promised by developers for years, was hailed as one of the most significant moments in crypto's short history. There's the author, James Oliver. Ethereum has completed a long-awaited upgrade to its system in a move expected to slash its energy costs and intended to prepare the ground for more use of crypto technology in mainstream finance. The upgrade, known in the industry as the merge, which changes how new transactions are verified on the Ethereum blockchain, completed on early Thursday, said co-founder Vitalik Buterin. Ethereum powers large swathes of the Web3 world, which includes applications such as digital collectibles and decentralized finance systems. The milestone, which has been promised by developers for many years, was hailed as one of the most significant moments in crypto's short history by fans, who planned merge parties in cities around the world and followed live-streamed watch parties on social media. This is the first step in Ethereum's big journey towards being a very mature system. There are still steps left to go, Buterin told developers. The merge marked a high-stakes test for the crypto sector after the crash in token prices this spring wiped out $2 trillion of the value of digital assets and shook faith in the market. Changing the architecture that underpins the 200 billion Ether cryptocurrency, the flagship token on the Ethereum blockchain, and tens of billions more of related assets and applications, is fraught with risks, from technical hiccups to squabbles among participants in the decentralized network, even after the merge was completed. Its backers expect a successful merge will boost confidence in Ethereum. Launched in 2015 by Russian-Canadian programmer Buterin and the multitude of tokens and projects that run on its blockchain, as well as blunt criticism over its energy consumption. However, Ethereum's developers said that they would need to monitor the network over the coming hours and days to ensure the upgrade is working smoothly. It is a complicated task, said Edward Hindi, Chief Investment Officer at crypto hedge fund Tier Capital. One forgotten fine-tune could lead to a lot of volatility and the market is in a panicky mood. The merge represents just one step in the plan sketched out by the Ethereum developers to overcome the network's capacity, which are seen as a major hurdle to achieving mainstream adoption of the decentralized finance. The merge solves one issue, but it does not solve a heck of a lot of other issues, said Lars Sears Christiansen, co-founder of Saxo Bank, who now runs a blockchain project called Concordium. Ethereum, like Bitcoin, has so far relied on network participants solving complex math problems to validate new blocks, a process called proof of work. Ethereum's energy consumption was similar to that of Finland. The merge refers to the moment when the existing Ethereum blockchain linked with a new network where transactions are validated by a group of individuals and corporations that have staked their own tokens as collateral for the security of the network, a system called proof of stake. The Ethereum Foundation estimates that replacing proof of work will cut the blockchain's energy consumption by about 99.95%. It will also eliminate the need for Ethereum miners, companies that make money from validating new blocks via proof of work. Anticipation of the merge has helped boost the price of Ether, which has risen about 75% from its low point in June. Ether has gained ground against Bitcoin, which has recovered just 15% over the same period. However, the years-long effort to complete the upgrade underscored the difficulty of making improvements to the Ethereum blockchain. Transactions on the network are still hampered by slow speeds and high costs, which critics say have said that limits the system's ability to grow. Hindi said the merge was just one step in the right direction. There are 3 or 4 more steps. It is a 2 or 3 year process. It is a big plan that is being rolled out, and we will have a lot of surprises on the way, good and bad ones. So having looked at the price of what's happening today, there doesn't seem to be much change. So there's no panic either way. It's not going up huge or it's not going down huge. This part here, the high costs. So a lot of people think that this is not going to affect the costs whatsoever. They're still going to remain high. We're yet to see, but that seems to be the general consensus. Now, if we go to Insider, this is the part I was more interested in. If you search for Richard Hart on Insider, you'll come across all his articles on this site. There's 5 articles here. This one, the most recent one, it says 7 hours ago, but this was available a few days ago. They probably updated it. Now, you can't read it on here unless you're a paid subscriber. I'm not a paid subscriber, but I do have a text version of it, so I'm just going to go through that. It's quite interesting to see his thoughts on that. A blockchain founder shares 4 reasons why buying Ether in anticipation of the merge is a bad strategy, and explains what the dream scenario would be for crypto. Right, let's go through the article. Richard Hart says the merge is bullish for Ethereum long term. Short term, there are too many negative variables that play against the price of Ether. They include technical glitches, Bitcoin's price, and the wider economic environment. A milestone event for the crypto sector is fast approaching. In mid-September, Ethereum is expected to make its long-anticipated upgrade to the merge. Yeah, as I say, this was a few days ago that this came out. The switch will take the crypto's blockchain from proof of work to proof of stake, which is supposed to reduce its energy usage by more than 99%. Removing miners from the equation will also drop operating expenses. The value generated from fees will instead be distributed to those staking their Ether. The remainder will get burnt, which could make the crypto deflationary. Howell Press, founder of digital asset hedge fund Northern Rock Digital, compares the new distribution structure to dividend yields and stock buybacks in equities. Even though we're in a crypto winter, old habits die hard. The shift has some investors getting back to their old ways of buying the rumor and selling the news. Ether hit its lowest year-to-date price in mid-June when it broke below $1,000, down about 80% from its all-time high. But by mid-August it had tapped 2,000 before dropping back down. The upgrade is indeed bullish news for Ethereum. It will stabilize and increase Ether's price long-term, because selling pressure from the miners who are swapping their rewards to cover operating costs will be removed, says Richard Schuler, who is publicly known as Richard Hart. What it won't do is reduce fees, which investors need to understand. Hart says buying Ether now is a bad strategy. Short term, there are too many moving variables that could play against the price of Ether. He is founder of HEX, an ERC token launched on Ethereum's network that designed to replace high-interest savings account as to act as a store of value. He's also working on a new layer 1 called PulseX, a controversial project that's meant to be replicated fork of Ethereum that copies a holder's Ether onto itself. He told Insider, if Ethereum's upgrade has a hitch, Hex would have problems too. Like any software upgrade, there could be things that go wrong. This is one reason why he doesn't recommend making speculative bets before the merge. The risk isn't limited to a plunge in price. In traditional equities, investors speculate all the time. They can even short a stock if they think the underlying company will fail. However, a failed blockchain upgrade may not even mean a drop in price. Instead, it could lead to a freeze in transactions, he noted. There's also a strong possibility that Bitcoin's price will plunge even further, which historically drags down Ether's price as well. Bitcoin and Ether have consistently had a positive correlation since late 2017, and with a coefficient of 0.83, both tend to rise and fall together, according to Coinmetrics data. First, Bitcoin still hasn't dropped up to 85% from its all-time high, a pattern observed during crypto winters. In a previous interview with Insider, Hart said that Bitcoin would need to land anywhere between 10,600 and 10,350 to bottom out. This would mean that Ether's price is at about 750. Second, crypto's previous winters didn't occur during wider economic turmoil, he added. This time, however, the Federal Reserve isn't done with its fight against inflation. which means interest rates will continue to rise, and as long as rates are going up, the stock market and crypto will only go down. Third, Hart points out that Grayscale Bitcoin Trust, which buys Bitcoin and then sells shares, is trading at around a 33% discount to the value of Bitcoin. This siphons away demand for actual Bitcoin in his view. The dream would be they stop raising rates, Bitcoin does its 85% dump, and the Grayscale discount goes away, Hart said. Finally, the Bitcoin community is still awaiting their inventory of hundreds of thousands of Bitcoin becoming available once the US and Japanese governments release the seized coins from Ross Ulbricht, founder of Silk Road and Tokyo-based Bitcoin exchange Mt. Gox. At some point, Bitcoin can diverge from the stock market, or ETH can diverge from Bitcoin, Hart noted. However, this would only happen once everyone is done selling. So those are Richard Hart's views and 4 reasons why buying ETH in anticipation of the merge is a bad strategy.